Hello everyone, this is Yuvraj, working as an assistant professor in Department of Commerce DM and DM as in digital marketing and data mining at Dr. SNS Rajeshmi College of Arts and Science, Coimbatore. Now we are going to see about banking law. So what does mean banking law? So it is in financial I think. So now we are going to see about banking law. So banking law is notice that introduction, overview of core banking laws and compliance obligations. This presentation outlines primary legal frameworks, supervisory rules, and institutions' level responsibilities to maintain financial stability and protect consumers. It highlights practical compliance, priority, and regulatory expectations for banks and financial service providers. So regulatory framework, so we're going to see about a regulatory framework in. So it is acts as a bank, primary statute governing banks and financial stability. These acts set governance standards, capital requirements, and supervisory power, emphasis on capital adequacy and systemic risk controls, ensure resilience and market confidence. Institutions must align policies with statutory mandate and update governance practice regularly. So licensing rules. So there is some rules and criteria for it. So licensing criteria define market entry, ownership limits, and fit and proper assessments. Regulators requires robust business plan, minimum prudential metrics, and viable governance framework. Ongoing conditions includes reporting, liquidity, buffers, and compliance programs to retain authorization. So next is an capital adequacy. Banks must maintain adequate capital to absorb losses and support growth. Regulatory frameworks define risk weight assets, minimum capital ratio, and buffers to protect solvency. Continuous monitoring and stress testing are essential for compliance and market confidence. So these are the capital adequacy. So is then compliance requirements. So what are the requirements we need it for it? So nothing but anti-money laundering. Strong AML programs prevent illicit finance and reputational harm. Implement customers' due diligence, transaction monitoring, and suspicious activity report with periodic training. Maintain documented policies and independent testing to satisfy regulator expectations. These are the anti-money laundering. So next is then consumer protection. So what does mean consumer protection? Protecting consumer preserves trust and reduce legal risk. Adapt clear disclosure practices, fair lending rules, and compliant handling procedure. Monitor product suitability and ensure staff are there to conduct standards and ethical sales practices is an consumer protection. Next we are going to see about reporting obligations. Timely reporting supports supervision and market transparency. Submit regulatory returns, capital and liquidity reports, and incident notifications. Ensure data quality, reconciliation, controls, and governance over reporting process to meet statutory deadlines. Now we came for the conclusions. So clear governance and robots control underpin regulatory compliance and financial stability. Priorities capital management, AML defense, consumers safeguards and reliable reporting to meet statutory obligations and sustain stakeholder confidence. And thank you.